All right. Good morning, everybody. Good morning, all you magnificent melonheads of the world. Happy Friday, everybody. Today's January 24th, 2025. And a top story this morning, I'll call it the top story. I use that phrase loosely because it's not having that big of an impact, but it was pretty big news. The Bank of Japan has followed through and they cut interest. I did it again. They raised interest rates by 25 basis points. By the way, I have this whole rate cut, rate hike dyslexia thing going. I'm working on it, guys. I'm sorry. The Bank of Japan raised interest rates by 25 basis points, a move that was largely expected because Fed officials had telegraphed that they were going to do that last week. So a lot of the move and things like the yen were already priced in. We had a little bit of a strengthening in the yen earlier this week, late last week. And so that move was largely expected. Actually, we see the yen weakening a little bit on this right now. Maybe we call that a little bit of selling the news going on with the yen. So not really a big market impact, at least not right away, because they were able to telegraph this. But keep in mind, guys, the yen, the rising interest rates in Japan, and more importantly, the unwind of the yen carry trade, that remains a massive threat to market valuations right now. We saw what that could potentially do on August 5th of last year if we see that yen carry trade start to unwind in a disorderly fashion. Now, there was some dirtbaggery that they did at the exchanges in order to stop people from selling stocks on August 5th. That prevented that from cascading and spiraling out of control. But that problem didn't go away. And since August 5th, and since that dirtbaggery, we've seen such a significant weakening in the yen again that it stands to reason that people have piled right back into that yen carry trade, which means that problem is right back to where it was before all that mayhem in August. So keep an eye on that USD JPY chart. We'll take a look at that today and see what's going on there. Again, a largely expected move and a muted impact to markets for now. Now, the bigger story that I think, and it's not getting as much airtime despite Mr. Orange being involved, was Trump over the last 2 or 3 days. All right. Now listen, guys, I know we got a lot of people who like the Donald here, and there might be a few people who really don't like him. I voted for the guy. I certainly didn't vote for Kamala Harris. But what I've seen over the last few days, in particular, these things involving inflation and the Fed, guys, we got to call this out for what it is. This is BS. All right. 2 days ago, Donald Trump passed an executive order basically demanding inflation come down. All right. That's fine. You can shake your fist at inflation and demand it come down all you want. You might be surprised to learn that it doesn't really work that way, that there are things you need to do, disciplined approaches, and sometimes painful policies that you need to implement in order to really stop this inflation that has been killing people. It might result in things like higher unemployment, people losing jobs. It sucks, but you can't just pass an executive order to say no inflation and expect it to work that way. Now, that wasn't really the big thing. The problem is yesterday when he's talking at Davos, the Donald demanded lower interest rates. Guys, that's not how this works. If you want inflation to come down, lowering interest rates doesn't help you. It makes it worse. Have we forgotten so quickly what happened in 2021, 2, 3, and say the first half of 2024? Lowering interest rates is not how you get inflation to come down. That's not how this works. Now, I talked about this a lot before the election, in the lead up to the election. I wasn't really following the election that close on the channel because I told you guys quite often, it doesn't matter, in my opinion, because no matter who won, maybe the social policies would be different, or this policy would be different, or somebody would say something you hate versus you like. But when it came to the economics, they were both money printers. They're both rate cutters. They're both inflators. And we are seeing that right now. Donald Trump is demanding interest rates come down. So, look, the press is going to gobble this up. They're going to play this out. This whole fight between Trump and Powell, they want to make a big deal out of it. We're going to hear a lot about it at the next FOMC meeting. I'm sure Steve Leisman and all those, really attractive millennial women at the Fed press corps, they're all going to be trying to play Trump and Powell against each other. And Trump is playing right into their hands. It's stupid. The Fed should be independent. But look, every incumbent, every president wants lower interest rates because lower interest rates means the stock market goes higher. And then they can look at the stock market and be like, see, I'm the best economic president ever. Biden did it. Now Trump's going to do it. And before Biden, Trump did it in his first term. This is what is causing the problems. And look, I'm going to go out on a limb here, and I'm going to say probably more of the people on the Austrian side of the economic spectrum probably reside on the right. And I'm thinking more of the Keynesians and the easy money guys are probably on the left. That's not it's not a perfect correlation, but I think you'll probably find, generally speaking, that's accurate. If the right or if the Austrians really want to maintain the moral high ground when it comes to monetary policy, then you need to call this out for what it is. It's BS. This is not a time to lower interest rates. Yes, I understand higher interest rates is inflicting pain on people and mortgages and the housing market and the auto sales. I get all that. But look, inflation is still over, 3%? Inflation has never gotten to the Fed's arbitrary 2% target, and that 2% target by itself is too high. It should be 0%. We have to stop the easy money, and this happens every time. The Republicans talk a big game when the Democrats are in power, and then the Republicans get in power, and they do the same freaking thing. It's got to stop. All right, end of rant. Also, we had some other Trump news yesterday. We had Trump signed an executive order establishing a working group for crypto. The market kind of was meh about that. I think the crypto guys were hoping for something a little more concrete, maybe the immediate establishment of that strategic Bitcoin reserve that we've been hearing about. And instead, we got the creation of a working group to explore the feasibility of establishing and submit a report within 100 days. It was very non-committal. And I think the crypto guys were pretty disappointed by that. We had a little bit of a sell-off in crypto and Bitcoin yesterday. It seems like it's coming back this morning. We also had some soft language on tariffs from the Donald yesterday in an interview with Sean Hannity. He basically said, I have this big tariff hammer hanging there. I could bludgeon China over the head with it, but I would rather not use it. And that I would rather not use it phase actually caused a measurable impact in the DXY. The dollar weakened on that comment. Trump has been... He's not been as gung-ho on the tariffs as many feared on the opening days of his presidency, and we've seen the dollar weaken over the last few days because of that. In some more specific business news, we got a story about Boeing. They burned through about $4 billion in cash in the fourth quarter. The cash burn over at Boeing continues ever since their big spate of safety problems. They're still burning through the money. Remember, they raised a lot of money in the last quarter, so they're not going out of business anytime soon, but Boeing hasn't been profitable since 2018. Guys, it's 2025. Sooner or later, you got to make money, right? Even if you're Boeing, sooner or later, you got to make money. I'm pretty sure that's how that works. We got earnings from Verizon today. They were fantastic. Big beats on a beat on earnings, a big beat on their mobile phone subscribers, a big beat on broadband subscribers. So good things happening at Verizon. American Express is posting pretty good results. An 8% increase in transaction volume in the fourth quarter. Now, that's interesting because remember, we've seen some data that said consumer spending was up about 4% in the fourth quarter for the holiday shopping season. So American Express seeing twice as much volume increase as the market as a whole. Remember, Amex is some of your more upscale, wealthier borrowers. And so there's another data point there suggesting the bifurcation in the economy. The rich are doing very well. The Amex numbers support it. There's also some commentary in this article about a strong dollar, possibly causing a surge of travel demand as Americans take advantage of the beneficial exchange rate and do some traveling overseas. Again, the wealthy will probably benefit from that. I don't know many middle-class working folks who are thinking about taking a trip to Europe anytime soon, self-included. We got some interesting updates from the Supreme Court this morning regarding that requirement for reporting beneficial ownership interest. I don't know if you guys remember that one, and pay attention, all you LLC owners. You might want to see that story. And I got to send a shout out to my buddy Nashville Pasta Man, who you may recall 2 days ago on the live stream, he left a comment about how Bridgestone would be sending out layoff emails that day. Well, we got a story late yesterday confirming that story. Fine bit of detective work there by the Pasta Man. He was right. We'll go over that one. They are closing a plant in Tennessee. More layoffs, more buyouts, more job losses. And with that, why don't we shrink my big melon of a head and let's see what's going on in the market today, shall we? And guys, if you will, take a moment to hit that like button. And if you're new here, hit that subscribe button so you can come back tomorrow because we do this one every day. Right now, the S&P 500 is down 6.6 points, about 0.1% lower, a little bit in the red, but stock's essentially flat here. We've got the Dow is down 94 points, about 0.2% lower, and the NASDAQ is 6 points lower, albeit relatively unchanged. So, we got the bear thumbnail today. Stocks are down a little bit, but it's not like we got a big sell-off going on or anything. Now, this is interesting. We've got the DXY is lower by a good amount today, 107.68. That's down 46 basis points. What's going on with the dollar? Well, let's look at this one here. Dollar slides as Trump softens China tariff stance, according to Markets Wrap. This one happened last night while the Donald was giving an interview on Hannity. And let's see, the dollar dropped to a one-month low after President Donald Trump appeared to soften his approach toward tariffs on China. Stock futures fluctuated after the S&P scaled a fresh peak. The president said in an interview with Fox News that he would rather not use tariffs against the world's second largest economy. He has also so far held back from imposing tariffs on Europe, though he has warned of levies against Canada and Mexico. So, look, Trump is negotiating through the press right now. He's talking about, I think the specific wording he used is, we have something we can hold over China very badly. It's tariffs. And then he said, very offhandedly, I'd rather not use them, but we could. And the market kind of latched on to that I'd rather not use tariffs thing, which again, this is like Trump just negotiating out loud. That's kind of his style. But right now, it's the first few days of the presidency. The market is scrutinizing his every word and reacting. And so this kind of flippant remark that he makes about how he'd rather not use tariffs if he didn't have to is enough to send the Dixie down 45 basis points. Looking over at the bond market this morning, we got a little bit of a mixed bag. We got higher yields on the long end, lower on the short end. The 30 years at 4.873, that's up about a half of 1 point. The 10-year, 4.650, up almost 1 point. We got the 2-year, meanwhile, at 4.274. That's down a point and change. And the 1 month here is actually up 2 points at 4.339. Looking over at the commodities board, check out gold up by about $22 here, $2,777. Gold is sitting here at 20. We hit a high this morning of 27.84. Not quite an all-time high in gold, but we are getting damn near an all-time high here. Looking pretty good this morning. I like the shiny. Meanwhile, silver for spot silver is $30.76. That's up about 31 cents or 1% higher this morning. So precious metals are doing all right here. Copper, in the meantime, is down about 0.2%. Platinum is up 1/3%. Palladium is up almost 0.9%. And WTI crude is at $74.90 for March futures. That's up about 27 cents or 0.3% this morning. Take a look at Bitcoin here. We've got Bitcoin is at $105,044 as priced on Coinbase. And we had a little bit of volatility yesterday. It doesn't really reflect in the chart, but you can see this candle from yesterday. You got a big wick above and below. The market was hoping for a big announcement yesterday. There was some talk about Cynthia Loomis was going to be appointed crypto czar or whatever, the head of some committee. And then we got the announcement. It was, I think I have an article on it here. Where is it? Yeah, here we go. This is the one. Trump creates working group to study Bitcoin stockpile and other changes for crypto. President Trump signed an executive order meant to spur the crypto industry in the U.S. It marks a 180-degree turn from the crackdown seen under President Biden's administration, but stops short of creating the strategic reserve that the industry had hoped for. And that's the thing right there. Everybody was hoping an executive order creating the strategic Bitcoin reserve. I think maybe some of the Uber bulls were hoping the government was going to start printing dollars and buying Bitcoin, which would be totally insane, but it's the 2020s in the U.S. government. Let's not put it past them. But instead, we got an executive order establishing a working group that will explore the feasibility of creating the strategic Bitcoin reserve and then report back to the president in 180 days. Very, very soft language here, very wishy-washy. I mean, look, everybody was like, oh, this is it. This is the big crypto order. And what did they get? They got a working group. Wow, maybe next time we call it an ad hoc commission to explore the feasibility cautiously. Anyways, Bitcoin did not really react so positively to that one, but now we're up this morning. Things looking okay still. And when I say Bitcoin didn't react positively, let's put it in perspective, guys. Bitcoin is still above 100,000. So you're like, oh, it was 109,000 at one point, and now it's 102 or 105. Oh my God, Bitcoin is crashing. Not really what's happening. There's a lot of people out there who really hate Bitcoin And every time they get a red candle, they point to it and they say, aha, guys, it's a couple of points off an all-time high here. Crypto winter is coming eventually, but it's not here yet. It's a long way off still. Now let's talk about the big one here. Japan hikes rates, solidifying the exit from rock bottom borrowing costs. A move that was largely expected here. They had telegraphed it. The Bank of Japan raised its key policy rate on Friday to the highest level since 2008 and took a more bullish view on the strength of inflation, fueling expectations for more rate hikes and supporting the yen. Governor Kazuo Ueda and his fellow board members lifted the overnight call rate by a quarter percentage point to 0.5% at the end of the two-day meeting, according to a statement from the central bank. A hike was almost fully priced into market expectations ahead of the announcement. The decision to wait until January to hike the rate appeared tied to the need to confirm wage trends and gauge the initial market reaction to the return of Donald Trump to the White House. The BOJ flagged in its statement the relative stability of current global financial markets as a favorable factor, an indication that it had been monitoring the response to the first few days of the new U.S. administration. So now, look, this was supposed to start like a year and a half ago. Everybody was like, I remember myself included, everybody had looked at Ueda. Ueda was an academic, but he was a very hawkish academic, and they were expecting him to come out of the gates running as soon as he took over at the BOJ, and he kind of didn't. I mean, now we've been hiking rates for over a year in Japan now, and what have we got? We got a 0.5 percentage point. 3 separate rate hikes. The first one was 0.1, then it was 0.15, now it's 25. So in a year and a half, we've basically gotten the accumulative what the Federal Reserve did in September. And it's been, even that was enough to cause that panic in August, but it's been not nearly as hawkish as many had feared, and it's already been very dangerous. So keep an eye on Japan, guys. This remains the possibility of one of those catalysts for the black swan, one of those big things that's lingering out there. Now, looking at the chart of USD JPY, this is the number of yen it takes to make a dollar. So when we see this chart moving down, that's a strengthening yen. When we see it move it up, it's a weakening yen. This was that August panic, guys. You can see the yen strengthened very suddenly on fears that the BOJ was going to do this hike back during the summer. And then, of course, the BOJ walked back those fears. They came out and they said, no, as long as stocks are selling off, we're not going to do that. There was some dirtbaggery. They didn't let people sell stocks on the morning of August 5th to stop the bleeding, and that worked. We immediately saw the yen start to weaken, and this chart kind of followed the chart of the U.S. 10-year as the Fed started cutting rates and long-end interest rates started rising. Now, late last week, we saw a little bit of a strengthening in the yen once again as this rate hike became expected, as the Japanese officials started to telegraph this move. And that part right there, that's circled, that's what it means when people say this was already priced in. We already saw the yen strengthen last week, and that's why the market's not reacting too much to this one. But it's been pretty muted even with that. Let's move on here. President Donald Trump says he'll demand that interest rates drop immediately. Guys, we need to tell him it's not how that works. The Fed sets interest rates, not the president. He can shake his fist and he can make demands all he wants, but the Fed is an independent regulatory body, and the Fed probably doesn't like him all that much either. So I'm not really sure what he's hoping to gain here. President Donald Trump lobbed his first volley at the Federal Reserve, saying Thursday that he will apply pressure to bring down interest rates. Speaking via video to an assembly of global leaders at the World Economic Forum in Davos, Switzerland, the new president, in a wide-ranging policy speech, did not mention the Fed by name, but made clear he would seek lower rates. I'll demand interest rates drop immediately, Trump said, and likewise, they should be dropping all over the world. Interest rates should follow us all over. Guys, we are a few months removed from the worst inflation since the 1970s. If you could stop messing with monetary policy causing more inflation, I'd sure appreciate that. And look, do we need to bring this chart up while we're at it? Let's take a look at the chart of M2, the money supply in the United States, and I'm going to zoom in to just the last year and a half or so. Could somebody tell me what the hell is this? Please. I mean, I've mentioned this several times on this channel. In the last 14 months or so, 15 months or so, we have seen over $1 trillion of new currency loaned into existence. The money supply has been increasing for over a year, and they want to cut interest rates, and then they want to act surprised when inflation comes back. Guys, we're making the same stupid mistakes over and over again. This is why I said the election, it kind of didn't matter, because no matter what happens, They're going to monetize government debt. They're going to increase spending. And everything I have seen so far tells me that that is exactly what's going to happen. We need higher standards. We need to do better than this. Meanwhile, Boeing expects a $4 billion loss for the fourth quarter after a chaotic 2024. Boeing said Thursday that it likely lost about $4 billion in the fourth quarter, adding to troubles at the manufacturer, which began in 2024 with a midair accident and ended with a crippling labor strike and layoffs. The company said it expects to post a loss of $5.46 a share for the fourth quarter. It expects revenue to be $15.2 billion. That's less than analysts' expectations. Boeing said it's likely burned through about $3.5 billion in cash during the quarter. The company raised more than $20 billion, though, in that same quarter to boost liquidity during the crisis. Boeing has not posted an annual profit since 2018. Yikes. Guys, 2018, that was what, 6-7 years ago? Eventually, you're going to make money, Boeing. That's kind of the point. Right now, though, Boeing shareholders not really liking this news, down about 1% here, trading at $176.66 ahead of the opening bell. We also got news from Verizon today. Very good news from Verizon. Verizon tops Wall Street estimates with mobile and broadband gains. Verizon reported fourth quarter financial results that beat analyst estimates, including gains in new mobile phone and broadband customers. Verizon recorded a net gain of 568,000 monthly phone subs. That's according to their statement on Friday. That beat expectations for 490,000. Fourth quarter operating revenue was $35.7 billion, topping estimates at $35.3. Adjusted earnings of $1.10, top projections by just a penny. So they beat in pretty much every category here. That earnings, the adjusted earnings, I never like to see that tied to an earnings report, but it did come in ahead of expectations. Broadband was also a bright spot. Verizon added 408,000 net broadband subscribers in the fourth quarter, almost doubling expectations for 227. Fios fiber customers increased by 51,000, while the company added 373,000 customers to its fixed wireless business. Pretty good results all around for Verizon here. That stock is up 1.84% ahead of the open, trading just under $40 a share, up about 72 cents here. We also got earnings from American Express here. American Express profit gets boost from holiday shopping. We already had some data that said holiday shopping was at least okay, kind of in line with estimates. The consumer spending on the whole, it rose about 4% for the fourth quarter. So it was a pretty good holiday season, but American Express had a really good holiday season. American Express profits increased 12% as well-heeled consumers spent more than analysts expected on their credit cards over the holidays, a tailwind the firm said it expects will continue. Got to like that well-heeled. They don't want to say the rich people are doing really well. They'd rather just refer to their heels. I don't know why we're speaking in this code over at Bloomberg, but billed business or the transaction volume on credit cards and other products issued by the firm rose 8% to $408.4 billion in the fourth quarter. Fourth quarter net income of $2.17 billion or $3.04 a share, slightly missed estimates. So a little bit of a miss on net income there. I'm not sure what's driving that, but that big driver there, transaction volume up 8%. That is more than double what the rest of the economy did. So you can see the bifurcation of the economy here, the wealthy doing very well here. Now, there's also some interesting points here. They're saying there's some euphoria in the market environment right now, or the economic environment in the United States. The dollar is very, very strong. Given that strong dollar, Squarey expects many U.S.-based travelers will go abroad this year. By the way, this guy Squarey, that's the CEO of American Express that they're referring to there. The strong dollar leading to a surge in travel as Americans take advantage of the exchange rate. That's not something that's been on my radar, but it's possible that's contributing to some of the pretty good airline earnings that we've seen recently. So keep an eye on those travel stocks, those of you who are looking for that. American Express stock, though, actually not doing so well. Possible that net income miss is in the driver's seat here, $321.97. It's actually down by 1.2% this morning. Not really sure. I guess some of those results were already priced in. Now, pay attention here, all of you side hustle LLC owners. This one potentially affects you. This one was out just yesterday. Beneficial ownership interest requirements remain on hold. Supreme Court ruling won't force farmers and others to file BOI reports. There was, we'll call it a setback for people who don't want to fill out an extra form yesterday, but it is not the end of the world. A U.S. Supreme Court ruling on Thursday will not immediately force millions of businesses to now file beneficial ownership interest reports, according to U.S. Treasury officials. The High Court overturned an order from the U.S. District Court for Eastern Texas from December that had frozen the Treasury Department's rule for filing beneficial ownership information with Treasury's Financial Crimes Enforcement Network. Still, there is a separate nationwide order issued by a different Texas judge that remains in place. And because of that case, the Treasury Department is currently not requiring companies to file their BOI details with FinCEN. The BOI rule affects more than 32 million businesses nationally. So, look, nobody wants to fill out an extra form and send it off to the government. I already waste enough time filling out stupid government forms every year. I don't want one more. I also think it doesn't matter. Like, you're going after people who sell beer koozies on Etsy as if that's going to solve all your financial problems and your, all the big money laundering problems. Look, guys, we know where the financial crime is. It's not on freaking Etsy. I don't understand why they've made such a big deal out of this, but they did. I hope this goes away. I think it's an unnecessary burden on small business owners. But there was a setback in the Supreme Court ruling in Texas. There is still that other court order that remains in place. Bridgestone Americas announces business footprint optimization and closure of the Laverne plant. No word yet on the Shirley plant on how they're doing over there. But I got to send a shout out to my buddy Nashville Pasta Man, guys. I don't know if you remember this one from just a few days ago, but he sent a super chat that said layoff emails were about to go out at Bridgestone. That was 2 days ago. And then late yesterday, we got this announcement. So my hat's off. Well, hold on. First, I have to put on my tinfoil hat so that I might take off and tip my tinfoil hat in the general direction of Tennessee, because Nashville Pasta Man, you nailed that call, brother. Let's see here. Bridgestone Americas, the group company of the Bridgestone Corporation, today announced its decision to close its Laverne, Tennessee truck and bus radial tire plant effective July 31st, 2025. The decision is part of the company's strategic initiatives to optimize its business footprint, strengthen its competitiveness, and enhance the quality of the company's U.S. operations. So another plant is closing. No word in this release about how many layoffs. I believe the number was somewhere around 700 layoffs. It's also worth pointing out that last year, Bridgestone offered a lot of people buyouts to try to reduce that footprint. Well, one way to phrase it, or as Pasta Man mentioned, those buyouts are now been made mandatory. So this probably not going to hit the jobs numbers right away. They're not closing the plant until July. And if they're giving people anything like a severance, then they won't show up on the unemployment and the jobless claims until that severance runs out. But this is another example of hundreds of jobs going away, more, eventually higher unemployment in the United States. But the real reason I wanted to throw this one out there is because, Pasta Man, you called this one. You heard it here before you heard it anywhere. We beat the press release from the company and anywhere in the press by about 48 hours. This wasn't my call. This was Pasta Man's call, but it happened on this channel. So you better believe I'm going to go ahead and take credit for that one. So thank you very much, Pasta Man, as well, while we're at it. Thank you, everybody in the chat. Thank you, everybody who sends me these tips and these emails. I get a lot of messages from you guys out there. There's this whole big intelligence network that has sprung up around the channel. I never expected that when I started this thing, and I love it. I get so many messages. I don't reply to all of them. Please don't take that personally if I don't reply to any of your messages, you guys who message me a lot. But rest assured, I read almost every single one of them. I would do nothing but reply to emails if I wanted to reply to everything. But thank you guys for everybody who contributes to the channel in this manner. You guys make the channel better, and I really appreciate that. And once again, Nashville Pasta Man, good job, brother. That was a good call. Nailed it. And you heard it here first. And I just want to say thank you so much to M&J for gifting 20 Nobody Special Finance memberships. Thank you, M&J. You are awesome. Sorry about that whole thing with the Dirtbaggery t-shirt, man. That sucks. You deserve that Dirtbaggery t-shirt, M&J. I hope Spring finally gets their act together and they start shipping those. But if you guys receive one of those memberships, be sure and let M&J know in the chat that you are grateful for such. And T.A. Chapman is also getting in on the new Melonhead memberships game this morning. Thank you, T.A. Chapman, for gifting 10 Nobody Special Finance memberships. You 30 new Melonheads, drop a thank you in the comments below. And there he is. There's the Pasta Man. Filed a lawsuit demanding the weather get warmer. Well, I'm going to go ahead and file a custom Melonhead amicus brief. I would like to join in on your lawsuit, Pasta Man. I have had enough with this. Whose idea was winter anyway? They should be fired. They should be flogged. They should be sacked. Winter sucks. This winter has been particularly lousy. By the way, guys, watch those natural gas storage levels over in Europe. I saw a report yesterday. It was a tweet. I didn't have a chance to analyze the source, but the natural gas storage levels in the UK have already exceeded the low from last April. It's still January, and it's still really cold, and the storage levels are already lower than the lowest point at the end of last winter. Pay attention, guys. If this cold doesn't let up soon, we could have energy problems in Europe. And not for nothing, Europe has dodged a few bullets the last few years. Ever since the pipelines blew up and the Russian gas stopped flowing, we had a couple of warm winters since then. And I think Greta and her little gaggle of idiots probably mistook that unseasonably warm weather as a sign that their stupidity was not causing untold economic mayhem. This year, I think it might come out differently. So thank you very much, Pasta Man. Good luck on your lawsuit, sir. I appreciate the support of the channel. Also, good call on Bridgestone. T.A. Chapman says, so JFK files and MLK files being released. I didn't know about the MLK files. I didn't know there was an MLK file. I thought we knew who did that. Thanks, Trump. Now what's up with aliens? The aliens thing is a little bit more concerning. Look, the JFK thing, and I hadn't heard about the Martin Luther King file. I didn't know about that. The JFK thing, I think what that is, at this point, all the people who did it they're long dead. So does it really matter if you're Trump and you're trying to like differentiate yourself from the swamp and trying to prove you're not a swamp creature? Well, pulling back the curtain on a 65-year-old conspiracy theory is a good way to show that. In the grand scheme of things, does it really matter? Probably not. It's not going to change anything in the short term. I'm curious to see what's in it, and I'm glad they're finally doing it. But at the end of the day, I think it's more a political maneuver than anything else. How about that Epstein client list? Maybe we throw that one out there. How about that? That's something that is relevant that affects people who are currently in power right now. How about whatever file is on whatever computer involving the Epstein client list and the circumstances of Epstein's death? I'd like to see that before I see the JFK files. I don't care about JFK. It happened like 15 years before I was freaking born. Epstein, that's fresh. Thank you very much, T.A. Chapman. And thank you, Eugene, who says, hey, Trump, let's see the E-list. Yes. Yes. I hadn't seen that comment before my rant. But yes, Eugene, thank you, sir. You are so right on the money. 100 million melon coin to Mr. Eugene, who is saying exactly what should be said. Thank you very much, Eugene. Uncle Fedster says, happy Friday, Jack. I posted at JG Nuke a link to a tariff schedule from DigiKey. Some become active in September 2024, while others are delayed until 2026. Guys, if you don't, DigiKey, that's like one of those McMaster car, big electronic supplier. I didn't know there was a tariff schedule. We've had that kind of specifics already. I hadn't heard about any of that. So thank you, Uncle Fedster. I'll take a look on at the tags on Twitter. Thank you for that information. See earlier comments regarding Pasta Man and Bridgestone about the network and the flow of information around this channel. Thank you, Uncle Fedster, for both your support and your contribution to the network. And thank you to Break My Wallet Motorsport, a name that gets me every time I hear it. Michelin laying off 1,400 by end of year in Oklahoma. What is going on with the tires, man? Is this like the cumulative result of work from home after so many years? The average road miles driven is just resulted in less tire consumption. And so you got Bridgestone. What was that? A truck and van factory for Bridgestone. Michelin, I'm guessing that's going to be more like your passenger vehicle tires. What is going on in tires? Wow, we got a lot of layoffs going on. Now Michelin too. Well, thank you very much. Break My Wallet Motorsports. A tough time to be in the tire business. Good God. Watch those jobs numbers, guys. Thanks again for supporting the channel, Break My Wallet. And thank you, everybody, for having your coffee with the Melonheads this morning. You guys rock. Special shout out to my magnanimous Melonheads on Patreon and YouTube. Looking forward to talking to you guys once again at 2 p.m. Eastern Time this afternoon for our weekly Zoom get-together. Links down below to all that good stuff should you feel so inclined. Text message from Mish. Yeah, he was just clarifying one of those comments. Thank you, Mish. Hi, Mom. Hi, Dad. Love you guys. Everybody, till next time, live small and dream big. Oh, like and subscribe, too.